Aberdeen, which globally manages over $400 billion, and we have the Aberdeen India Opportunity Fund, which is $700 million and counting at last count. Hugh Young now joins us. Hugh, always good to talk to you. The Indian market has seen a lot of volatility. Emerging markets have also seen some underperformance post the Trump win. Are you viewing this as a great buying opportunity, or do you see more pain for emerging markets in India?
Well, in part it's a buying opportunity, although of course the broad emerging market falls have been relatively small compared to what we've seen in the past, so we're still not quite sort of champing at the bit and pouring all our money in, but we're not too worried yet by the price falls. And as long-term investors, of course, look to any price weakness as opportunity rather than threat. Although, like the world as a whole, we're sitting back waiting to see what Mr. Trump is going to do when he ascends to the presidency next year. Whether we will see a rising tide of protectionism, rising tariffs and so on, which fundamentally is not terribly good news for the world as a whole, I would argue, and certainly not that good news for emerging markets necessarily. And then, of course, with India, we have some special circumstances with everything going on the monetization front. As well as for foreign investors, one shouldn't underestimate the effect that the changes at Tata have had on sentiment.
Okay, well, that's quite a few themes that you have laid on the table, Hugh. Let's start with the first of them, which is going to impact emerging markets generally. Are you therefore sensing that after President-elect becomes president, the rotation of money away from EMs to DMs will increase?
Well, we're waiting to see. That's been the initial knee-jerk reaction, has been something that surprised most people, has been a wave of enthusiasm for the US market itself, for spending plans within the US, infrastructure building and the like, and people being a little nervous about emerging markets. And this happens from time to time, and vice versa happens from time to time. I think the fundamentals behind emerging markets still remain as strong as ever, although with the caveat, of course, that the world economy is far from robust. We've seen a relatively anemic recovery in the US economy. Europe has its problems, plus, of course, we have various political events going on in Europe as we speak. Short on the tail of Brexit, we've got Italy and France. So there are lots of reasons for caution, but we still think there are some super opportunities in emerging markets. Of course, you have to be selective.
Hugh, hi, good morning. Let's talk about some of the stocks that you have in your portfolio. A sector that you have an exposure to is the IT space in names like Infosys and TCS, and we've seen a huge degree of underperformance there because of various issues like lower client spending, higher possible visa costs post the Trump victory. Is this a space that you're still bullish on for the longer term, or would you start to get a bit cautious here?
Again, it's a space where we're just waiting to see what measures come out of the US primarily and how that affects business. It's an area that's slowed down certainly over recent years, in part due to a slowdown in financial services, for example. Still an area where I think these names, the Infosys, TCS, still do a very, very good job. So they're world leaders in what they do, and within an Indian portfolio seem clearly something one should have in one's portfolio to balance the largely domestic stocks that we hold elsewhere within the portfolio. So we're not uncomfortable with them, but of course watching for any developments, and things move very sharply on speculation and rumours. We're just waiting to see what the facts will be.
Let's get back to our first answers. One of the themes that you mentioned was what's happening with the Tata Group. You have, of course, sizable holdings in some of the Tata Group companies, TCS, of course, being the largest of them. How are you looking at the situation right now?
TCS is our only exposure to the group as a whole. I think the foreign community has just looked at it with as much amazement, I suspect, as the domestic Indian community, because of course Tata has a superb reputation, and this is a bit of a stain on the reputation to have such a public spat between individuals. I don't think there's any, certainly we have no doubt that anything untoward has been going on at the likes of TCS, which remains a well-run company. But it's not a good advertisement for the poster child of governance. So it's a great shame. These things do happen for whatever reasons, and I suppose one just has to live with it. It can happen in all sorts of circumstances, but since it was such an icon of India from a governance point of view, it will have dented people's beliefs a little, I'm afraid.
But Hugh, I know, as you said, you only hold TCS, and that's independently run by its own management and extremely well run. But if you were holding any of the other Tata companies which are in the eye of the storm, or where debt is a huge problem, would you be trimming holdings? What are you picking up from the market itself?
Well, yes, that's a very theoretical question. We've deliberately avoided some of the Tata companies. So steel and cars, for example, we've not been totally comfortable with. I mean, in part for debt, in part for overseas exposure and the risks of ventures overseas. I'm afraid there was no great prescience on our part. It's just our natural caution and conservatism, and we have a tendency, you'll see right through our portfolios, to stick with companies where balance sheets are rock solid. So of course our preference has been and continues to be within that stable for TCS, which is head and shoulders above everything else.
Okay. I'll come back to some of the stocks once again, but before that, where does India feature now in the emerging market basket over the next, say, 3 to 6 months? And has India lost some of its sheen because of the recent impact that demonetization has had on demand, especially in the consumption space?
Short term, it probably has lost a bit of the sheen from the demonetization. I think for investors like us, we look beyond that. We're not investing for the next 3 or even 6 months. We're investing looking ahead years, and have been investing looking ahead years in India for 20, 30 years that we've been doing so. And we still see tremendous potential within India. Our one gripe, of course, is we always want to invest in it more cheaply. So we wish at times the market was at a lower level so we could put more money in. But of course, we've enjoyed a tremendous ride over the last quarter of a century in India with some superb companies, and we still see great potential from those companies. Yes, the economy is not going to do that well over the next 3-6 months, next couple of quarters, but looking ahead over the next 5-10 years, we're as comfortable as we were 5 or 10 years ago. So great opportunities for us, and it's one of our biggest emerging market exposures within our emerging market funds.
Okay, Hugh, you recently added positions in Bharti Infratel on the telecom services front and booked out of Ambuja Cement. Your thoughts on these two spaces in India? Cement, do you think, is getting a bit overextended? And telecom services, do you think, is it a good point now after the stocks having seen such a brutal correction?
Mm-hmm. Well, I guess reasons behind it, we've got quite a bit of exposure to the cement sector. Our preferred exposure has been through the Birla group of companies, so Grasim Ultratech has been our long-term large exposure to cement, which we still like and still see plenty of upside there. And as far as on the telecom side, we've had pretty low exposure there, and it's been a rocky area over the years. So it was just a matter of topping up gently, not necessarily a huge vote of confidence, but just within the context of the portfolio, given our very low exposure in telcos, that made sense. And given our very high exposure in cement, because it's not just through Grasim Ultratech that we have our exposure.
Actually, well, Hugh, you also have only HDFC and Kotak Mahindra Bank among your top, finance stocks, but non-bank finance has been running up wildly all through 2016. We want to ask you a bunch of questions on the financials as well. We have to take a mandatory break. Back in a jiffy.